Imagine a world where every single country is in debt. The United States owes over $38 trillion. The European Union, over $14 trillion. Japan, nearly $9 trillion. Even oil-rich nations like Saudi Arabia and export giants like Germany and China carry staggering sums. Here's the puzzle. If everyone owes money, who is actually getting paid? Welcome to the hidden architecture of global finance, a story where power, trust, and promises collide. Long before credit cards or digital transfers, national debt was born not in banks, but in war. In 1694, England was fighting France and running out of gold. The king turned to wealthy merchants. In exchange for interest payments backed by future taxes, they financed the crown. To manage this, the Bank of England was born. Suddenly, the state could spend money it didn't have, and lenders held something priceless: a promise. A promise that could be traded, bought, or sold. This was the birth of government bonds, the seed of modern finance. France copied it. The Netherlands refined it. The United States adopted it to fund its revolution and expansion. National debt became a measure of credibility. The ability to borrow meant the ability to govern. Empires shifted from conquering land to issuing bonds, extracting interest instead of gold. Balance sheets replaced battlefields. Fast forward 3 centuries. Debt is no longer a mark of failure. It's the world's dominant export. Every country owes, every bank lends, every citizen is both debtor and creditor. But who holds the other end of the rope? Take the United States. Out of $38 trillion, roughly half is publicly held. 2/3 of that is American institutions, banks, pension funds, insurance companies, the Federal Reserve. The other third, about $9 trillion, is foreign: Japan, China, the UK, Luxembourg, Belgium. So when people claim the U.S. is in debt to China, it's true, but only a tiny fraction. Most debt circulates inside America itself. Bonds are issued, bought by domestic funds, interest paid with taxes, flowing back into American retirement accounts. A mirror, a circle. This isn't just American. It's global. Japan lends to the U.S. The U.S. lends to Europe through the IMF. Europe lends to developing nations via the World Bank, and developing nations invest back in Western bonds. Every country holds someone else's IOU. Every promise is secured by another promise. Think of it like a poker table where every player borrowed chips from the next. The game continues only because no one stands up. Behind each bond sits a network of institutions: hedge funds, pension funds, sovereign wealth funds, central banks managing tens of trillions. They decide who can borrow cheaply, who pays a premium. Confidence falters and currencies collapse. Governments stumble. Entire economies can be reshaped overnight. Democracy decides leaders. Markets decide survival. Central banks don't just manage debt. They manufacture it. Every bond purchase creates new money. One balance sheet's liability becomes another's asset. Every coin, every bill, even digital currency carries invisible IOUs. Decades of trust have kept this loop alive. Investors believe interest will be paid, and the machine turns. But when confidence fails? Greece, Argentina, Sri Lanka. Creditors suddenly become visible. IMF, rating agencies, anonymous bondholders. Yet even after crises, the system resets. New loans replace old, debt is restructured, and the engine starts again. Governments don't aim to pay off debt. Unlike households, debt is rolled over. Interest becomes the product, rent for stability. The U.S. will never clear $38 trillion. Japan exceeds 250% of GDP, yet yields hover near zero. Investors aren't waiting for repayment. They're renewing the deal. U.S. Treasury bonds aren't liabilities. They're assets. Pension funds, banks, central banks rely on them. Paying off debt would destroy the foundation. so governments issue more rhythmically. Debt becomes a heartbeat, pulsing through pensions, mortgages, markets worldwide. Debt isn't only between nations, it's a transfer between classes. Interest flows from taxpayers and workers to institutions. Global debt and inequality rise together. Creditors aren't villains. Debtors aren't victims. They're two sides of the same engine. But when borrowing slows and promises exceed reality, the abstract question, who's the creditor, becomes painfully real. At the top of the global debt pyramid, there is no single face to blame. Not China, not Wall Street, not the IMF. It's all of them and all of us. Governments issue debt, banks multiply it, investors trade it, citizens rely on it. Debt once meant bondage. Today, it means balance. But if confidence collapses, the illusion ends, and we see debt for what it truly is, a promise that cannot be kept forever. Debt once meant bondage. Today, it means balance. But if confidence collapses, the illusion ends, and we see debt for what it truly is, a promise that cannot be kept forever. If this video gave you a new perspective on global finance, hit subscribe and ring the bell to uncover more hidden stories of money and power. Leave a comment below. What surprised you the most about the world's debt? And don't forget to check our other videos for the full history behind every financial mystery.